Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, the new live charting format. And this is the 200th event of the Analyze Your Trade series. And we got a great lineup today. And we're going to go ahead and get started with Valerie Fox. So I'm going to go ahead and turn it over to her.
Hello, everyone. Thank you for everyone who's joining live and logging in. This is a pretty cool event. It's my first time being on this particular show, so I'm pretty excited about it. It's Analyze Your Trade. If you are interested in connecting with me, I've just briefly got my website on the screen. You can message me directly from my website. But other than that, I'm just here to analyze some trades, show you guys, share some knowledge with you about how I look at the markets and how I analyze different trading opportunities. I'll start by saying I'm a Forex trader, I'm a price action trader. But with that being said, I can analyze a lot more than Forex because technical analysis spans really all charts. So my hope is that you guys will throw me some things you'd like me to analyze. I'm keeping an eye on the chat box. Just make sure you change your chat to everyone. That way everyone else can see your questions, and I'll be sure to read the questions as well. But this is just a very open forum where you guys can just share with me things you're trading, the way you're trading, and I will share my thoughts with you. As always with these events, this is just educational information. Don't consider any of this investment nor financial advice. You should always enter trades with your own research, risk tolerance, and decision-making, of course. So I'm going to start with a couple of things just to kind of get the chat warmed up here. So my first question to the audience here is, what do you guys trade? I'm going to start with some markets that are most traded. Are you a Forex trader? Are you a stock trader? Are you futures, options? Tell me what you trade in the chat box, and I'll start pulling up some of those things. So what kind of trade? I'm curious what we've got on the line. Pull up that chat box in the Zoom and share with us what markets you're trading right now. Come on, don't be shy. I see there's several of you on the line here. Okay, Forex, futures, options, and stocks. Okay, so a little bit of everything for some of you. Forex, stocks, and options. Okay, futures, Forex, and stocks. Okay, so let's, I'm going to switch over. I'm just going to use TradingView for purposes of analyzing things today. This isn't what I personally use to trade, but I know a lot of you use TradingView. It's a user interface I'm familiar with that will allow me to pull up things in many markets. So I'm just using this kind of for ease today. I'll pull up, well, I have Tesla pulled up here. A couple of things before we start. When we think about analyzing trades, or even just analyzing a certain ticker like Tesla, what's on the screen right now, there are a lot of different vantage points that one can look at a chart and get different signals to buy or to sell. And so one thing that will make a big difference is your vantage point, right? What type of trader are you? What is your trading approach, right? Are you a short-term trader? Are you a long-term trader? Are you looking for big moves in the market? Are you looking for small moves in the market? So I'm kind of curious. First of all, thank you to everyone who participated in the first question. It's good to see the chat log going here. My second question, and I'll cover kind of a wide range of how I view this, but would you consider yourself to be a scalper, a day trader, a position trader, a swing trader? Kind of curious what type of trading those of you that are live, taking advantage of this live call, are doing. So, as a scalper or a micro scalper is someone who's in and out of trades fairly quickly. You might use like the 1 minute, 5 minute, or 15-minute charts. Intraday traders, day traders are going to be using that, 15-minute, 1 hour chart to find entries. Swing traders who are holding trades for multiple days might use more like the 4-hour charts for their kind of entry and exit analysis. And then like position traders are looking for like larger fundamental moves in the market, might be holding their trades a little bit longer. So I see we've got some day traders and swing traders, day traders, all, and we also have a scalper and micro scalper. So what is kind of interesting for me to see, we have some people who are honed in on one trading approach, and we have other people who are doing multiple. And I think that's probably a testament to the variety of traders on the call, which is really, really awesome, because I think everyone will have different layers of nuggets that they take. But I'm a big advocate as a trader myself and as a trading coach who's been trading for 12 years now. There is a lot of value in focus, right? Especially when you're new to trading, especially when you're learning to trade or you're working on building that consistent profitability. There is a monumental, vital necessity to focus in order to get those consistent results first before you try to take on a lot of things, right? So if you're someone who is still working on, getting past that kind of break-even point in their trading, or if you're someone who maybe hasn't made it to the break-even point, maybe you're a little bit in the hole and you're trying to dig yourself out, consider really focusing on one trading approach and one market. And really even one specific strategy within that market and within that trading approach, because I was guilty of this years ago as well, thinking that I could take on the world and try all these different strategies and different ways of trading and different, I'm going to try to micro scalp and I'm going to try to swing trade and I'm going to try a trend trading style. I'm going to try a counter trend trading style, and I'm just going to see what works. And then that's what I'll focus on. Is anyone on the call guilty of doing that? Give me a yes or a no, where you're just kind of like throwing the spaghetti at the ceiling to see what sticks. Anyone guilty of that? Yes, I once was. Yes, I almost feel like it's kind of like it's kind of like you have to go through that. Lots of yeses coming through. I appreciate your guys' honesty. Sometimes you have to be really vulnerable and humble in your learning process as a trader to realize when you're doing certain things. So I think we've all been there at different times if we're not still there. And so I guess my comment, if that's you and you're in that boat and you're just, you can do this and you're confident, you're going to figure it out, focus will help. So just keep that in mind. But when I think about trading and I think about trading approaches, this is where I think it's really valuable to, and this is totally unscripted, by the way, I'm just trying to get into a chart analysis, but if you can't tell, there's a lot of things that really need to be thought through before you actually analyze a chart. It's not as simple as just like, hey, I'm just going to pull up a chart and decide if I should buy or sell. And it is that simple once you answer a few questions, right? What kind of trader are you? Because that will determine which chart you look at, right? Not only in the markets, right? There's literally thousands and thousands of different stocks, over 7,000 stocks you could look at. How are you going to narrow your focus if you're a stock trader? In Forex, there's hundreds of foreign currency cross pairs. How are you going to narrow your focus? Not only to those individual instruments, but also to the individual charts, because when you look at these charts, you have a couple dozen different charts you can look at for Tesla, for example. Are you going to be looking at the 1 second chart, the 1 minute chart, the 1 hour chart, the 1 day chart, a 12-month or a 1 year chart? So in order to even know where you should begin your chart analysis, you have to know what you're trading and you have to know what kind of trader you are. And there's a big difference between the analysis and the level of effort on a day-to-day basis in a scalper and a swing trader, right? So a scalper is very fast moving. You need to be at your charts more frequently. It's a little more intense, whereas maybe a swing trader only has to check their charts, once a day, maybe twice a day. They might do a little more intensive analysis once or twice a week, but then day to day, it's a little less intensive. So you really have to think about your availability to trade, what's going to best suit your personality as a trader. Are you craving action? Are you wanting tons of trades? Or is like a couple of high quality trades a week going to feel good to you? And those are some internal explorations that you really have to figure out on your own, because it doesn't matter what other people do. It matters what is going to work for you. So that's part of that identification process of really trying to figure out what kind of trader you want to be and what's going to work the best for you. That, maybe if you haven't done that level of exploration or that level of thinking in terms of, okay, well, I'm a scalper today and that's what I'm doing. But then you're like, oh, I only have 15 minutes a day. Well, that's probably not going to work out, because the velocity in which you have to look for qualified setups happens so quickly. You really need maybe an hour or two to be at your computer a day so that you can continue to monitor the charts a little bit more closely. Whereas maybe someone else might say, oh, I'm working full time still. I only have, maybe 15 to 30 minutes a day. And I don't really have much time to be at my charts outside of that time because I have other commitments. I have a job, I have family, I'm on the road or whatever that is. So you really have to think about that. And for some people who really love not having to be at their charts very much, for other people, that might not be enough action, so to speak. So it's really about kind of fine tuning where your sweet spot is. But, if we look at someone who might be a day trader, day traders, you're in and out of a trade in a single day. This is just, again, based on my own experience trading. Day traders might analyze the 15-minute chart or the 1 hour chart, or lower if you're more of like a intraday scalper. But, what this means is, when you're looking at the 15-minute chart, if I were to come analyze Tesla as a day trader, I'm going to find my entries and exits on the 15-minute chart, but I'm actually going to go up a couple time frames to see what's happening at a bigger picture. So from the 15-minute chart, I would go not just to the hour chart, but I'd actually go to the 4-hour chart. And I'd say, what's happening on the 4-hour chart? And on the 4-hour chart for Tesla, it's pretty darn clear we're in a downtrend. Can you guys see that? Like there's really, for me as a price action trader, as someone who really studies the movements over multiple time frames and how they correlate with one another. Can you guys see how on the 4-hour chart, especially most recently here, there's just a clear downtrend. We're going lower, we're getting lower highs, we're getting lower lows. Is that easy for you guys to see? Give me a yes or no in the comments, and I'm going to take a drink of water. Awesome. Lots of yeses flying. Love it. I like these to be interactive because got things popping up here. There we go. Okay. So on the 4-hour chart, we're in a clear downtrend. So now when I go back to my 15-minute chart, knowing that we're in a downtrend is actually quite valuable, because it might say, oh yeah. And Andrew points out there's a lot of selling volume. This is volume, right? I don't actually use TradingView. I use Oanda. So I think these bars on the bottom, when they're red, it's selling volume. So you can see the downward pressure here as the markets open today. When the year started, trying to get my bearings here. Here's the beginning of the year. We went down. We've done a little pullback, which, on the 15-minute chart could look like an uptrend, but now we've got that downward pressure again. Which is in alignment with the 4-hour chart. So then you might say, okay, I'm going to look for a selling opportunity. Or you might say, okay, I need more evidence that this is a good time to sell. So for me as a price action trader, I like to go back up to my higher time frame. From the 15-minute chart, the next level that I would analyze is the 1 hour, but I like to go up 2 time frames. So I would go up to my 4-hour chart and I'd say, okay, are we at a meaningful level of support or resistance? And it's a little bit difficult to see on these charts. So you can see here was a prior level of support, price went down, came up, tested it, became resistance, tested it again as resistance, and then back on Tuesday, it really shot down. So now we need to look for lower levels. We've got this level here where price was moving down, and you can see prices kind of right at that level, getting ready to go down. So I would say, yes, we're at a good level of former support that is now prices kind of retesting and moving to that downside. So let's go back to the 4-hour or the 15-minute chart rather. And if price came up here and is now headed back to the downside in support of that higher time frame trend, I might use you know, a Fibonacci, for example, for a retracement. I like Fibonacci's for entries because it really takes the guesswork out. Let me see. Again, bear with me. I use Oanda, which has a similar user interface, but it is a little different. Fib retracement. Ugh. It's going to just take me a minute to rebuild this. Where I want to, I don't want that. I want to draw my, here we go. This is where I'm used to. Boom. So from this high down to this low, price has gone down. You can see earlier today, price went down, but it didn't go below this prior low. So, you know, I would want to see price go below the prior low, kind of breaking this uptrend, which it has now done today. I'm just talking out loud here. If this is not helpful, say move on in the chat. If this is helpful, say helpful. I'm just kind of showing you how I would look at this stock. So basically, we've gone below this 15-minute low. Awesome, helpful, helpful. Thanks, Andrew. Thanks, 285936. I can't see some of your names. Okay, so price was going up, has now shifted back down. It's making lower lows again. It's making lower highs. So even on the 15-minute chart, now we are aligned with that downward pressure. So we've got downward pressure on the 15-minute chart, which is in alignment with the 4-hour chart. So we have 2 time frames that are aligned. We're also at a key level of support and resistance that we're reacting from or going through and moving down. And now I would say, okay, if we pull back into maybe this 61, I like the 62 fib retracements where price makes a move down, does a pullback. I've also previously traded the 78 retracements. You have to wait a little bit longer. They don't always make it that far, but I really like the 61.8. So if price were to, from here today, come up, retest this 61.8, a natural place for a stop loss would be just beyond this, because basically, if you think about what price did, price came up and it reacted down. So the sellers came in, it tried to come up and test this again, and it couldn't break it. And then it has since pushed price down. So the sellers and buyers are respecting this, where it's not really letting price move through it on a 15-minute. So this price point where the wick is plus a buffer might be a good place to put a stop loss where, hey, I want to sell when price pulls back, but if it pulls back too far beyond this previous recent high, it might be a good time to get out of the trade. You can also use these retracement values. The 61 retracement's a little far. I would maybe add in like the 38.2 or whatever, but if you're a Fibonacci trader, this will be very easy for you. But otherwise, I would just, you know, on a 15-minute chart, maybe add like 7 to 10 bips or whatever you guys call it in the stock. We call them pips in the in the Forex market. But let's see, 10. Let's see what it's called here. What do you guys call them in the stock market? Bips, BPS, basis points. So I would maybe go 10 pips or bips above that for my stop loss to give it a little breathing room, and then go down. You know, if you're enter here and you're going 10 bips above, that's a, you know, a 40 bip stop loss padding. So then you might be looking for at least a 40 pip, probably profit at a 1-to-1, or 2-to-1 would be closer to 80 bips. The interesting thing is the 1-to-1 is here. So you should definitely be locking in some profit or reducing risk if you enter here and come down to here, because this is a retest zone. And then the 81 is down here. You always look left. Price tends to repeat itself. It doesn't always hold prior support and resistance levels, but it tends to respect them when they're retested. So this is a very natural place to take some profit or to reduce risk by tightening your stop loss. And this is another very natural place to take some profit, reduce risk, or move your stop loss into the profit. Okay, what other tickers would you like me to take a look at? While you guys are typing, the other thing I'll share, so I just shared on Tesla a TSLA stock ticker. Amazon. Okay, Andrew, you're next with Amazon. Mike, I got you too. I'm going to write these down because I know the S&P index. I believe that's what SPY is. So the interesting thing about this is we just shared a 15-minute trade setup using price action only. We used a Fibonacci retracement just for kind of fine-tuning the entry on the pullback. But other than that, it was pure price action, okay? So price action analysis can seem kind of scary, but I think when you combine the right factors, it becomes very easy. And Andrew, I also got your BMRN. Okay, but I want to show you on Tesla. Let's go up a couple time frames. So let's say maybe you're more of a swing trader. So you might be finding entries on the 4-hour chart. So you would start your kind of big picture analysis 2 time frames higher. So 1 time frame higher would be the day, then you would want to go to the week. So Tesla on the week is looking very similar. We're in a downtrend on the weekly chart, making lower lows, lower highs. Price is definitely moving down on the weekly chart. On the 4-hour chart, we're in a downward trend as well, making lower lows, lower highs, even as the market opened this year. I would go back up to the weekly chart and see if we're at any key levels of support and resistance when you zoom out. It's a little bit difficult to see on this chart. So we have like a little level here. We have a little level right here that's kind of being retested at the moment. So you could even like add a line there. Kind of right here. I want a horizontal ray. Horizontal line, that's what I want at the close price. Okay, so now if I take this line where price closed back on July of 2020, price is kind of retesting that, but it's below it. And I go down, back down to the 4-hour chart. You can see price tested it here, reacted, went through it. It's kind of playing around this zone, but it's currently operating below it. So you might say, okay, well, we have an inside candle here. I might buy if it goes back up into this zone. So you could, again, just kind of use this zone. If it goes back up here, I want to sell. You could, again, use a Fibonacci retracement from where it was to where it is, do a pullback. Again, this would be a natural stop loss to go give it a buffer. On the 4-hour chart, you're going to want to give more like a, a 12 to 15 bip buffer or more. It's kind of up to you and your tolerance level there. But this is a natural place to provide a buffer and put your stop somewhere up here. Then you can determine your R values and what you're actually looking for. But in this one, the swing trade and the day trade on the 15-minute chart, we're both in the same direction. But kind of what I alluded to at the beginning of the call, this is why it's so important to know what kind of trader you are, because there are plenty of times where on the 15-minute chart, you might, the trend might be in a downtrend, where on the higher time frames, it might be in an uptrend. And so if you're trying to take in all this information and look at so many charts without a clear focus on what type of trade you're trying to identify, you could really create some mixed signals and confusion and lack of clarity in your trading. Okay, so let's go to Amazon. And Andrew, you were requesting Amazon initially. Which do you want me to look at this from a day trade, or more of a longer term trade, or more of a shorter term trade? Swing. Okay. For swing trades, I trade off the 4-hour chart. A swing trade to me means I'm entering and exiting on the 4-hour chart, but I'm looking at the weekly and even sometimes the monthly as well. And then trades last, anywhere between a day to a week. For me, traditionally, as a swing trader, I'm an active swing trader right now in the Forex market. So let's go up 2 timeframes to the weekly chart to get a bird's eye view of what's happening on Amazon's chart. So on the weekly chart, I'm seeing a clear downtrend here. Most recently, we're making lots of lower lows, lower highs. Prices clearly, if you are someone who does trend lines, you go from the highs here and the lows here, you're getting lower lows, lower highs. Sometimes for people, drawing these little channels is more helpful, just to see it, but clear downtrend on the weekly chart. So you're going to, if you're someone who likes to trade with the trend, which is always not a bad idea, then, clear downtrend. You zoom out even more on the weekly chart and you see kind of a larger move down as well. For anyone following Amazon, this should not be a surprise. Okay, so let's go down to the 4-hour chart now and see what we see. I'm just kind of curious. I'm going to zoom out on the weekly chart here and see if we're approaching any prior, by looking left, support and resistance areas. So yeah, there was one right here. Just do a horizontal line right there. You can see price kind of went below it and is now coming back up for a retest. That's often what happens when prior support and resistance zones get tested. They'll either, just bounce off of it and keep going, or in this case, they'll blow through it and then come back up for a retest before continuing down. So if I was only looking at the weekly chart, using the current trend and also prior support and resistance levels, I would say price is going to be continuing downward in the coming weeks for Amazon. Now, what we never know is how far the pullbacks are, right? Because price never moves in a straight line. It always moves in waves. So is it going to come back up and retest this level, which is also in line with these levels? Or is this level enough, and is it going to push down from there? This is why I always like to go down 2 timeframes to actually hone in on my entries. So let's go back down to the 4-hour chart. And what do I see on the 4-hour chart? First of all, overall downward pressure, which aligns, but we have some interesting things happening here more recently. We were getting lower lows and lower highs at the end of December. We got our lowest low here. You can see the lows are all going lower. The highs are all going lower, but then price popped up here at the beginning of the year, giving us a higher high. So for me, it's not ready for a sell yet. What I would be looking to have happen here before I would enter a sell, from this high where we got the higher high, the previous low is down here. So what I would want to see happen is I would want price to give me kind of like a head and shoulders, so to speak. I would want price to break this price first. So I want price to move below that. Even better if it moves below this, which wouldn't be required, but that would be like a stronger sell signal if it actually breaches this and gives us a new ultimate lower low. But this intermediary low right here, if it were to break that, then I would definitely consider entering, at this weekly, monthly support and resistance with a little bit of padding down for a sell. Again, using this as my stop loss reference point, adding a buffer of about, again, you'll have to pardon me, I'm not a stock trader, but, at least a 10 basis point buffer, or I'm sorry, 15 to 20 here, since we're not trading on the 4-hour chart. And then, or you could use a Fibonacci, as price moves down below this or below this, you would be able to draw a Fibonacci from this high down to however far that it goes. And then you could wait for a pullback to the, 62% retracement, or even the 78% retracement. Is that helpful, Andrew, on the Amazon charts? Again, this is just how I would look at it. There's a lot of different ways to trade charts. And I think that's probably the most overwhelming things for traders, is because, it's like shiny object syndrome. You're like, ooh, I'm going to trade like this. And then you hear someone else talk about another way of trading, and you're like, oh, that seems cool. I'm going to try that. And then you just, again, lose focus. I would say that's probably the number one reason traders don't get the results that they want, is because they lack the ability to focus on what they want. Okay, Mike, let's do SPY. And Mike, what time frame do you want me to look at? A day trade, a scalp, or a swing trade on the SPY? You're welcome, Andrew. Day trade. Okay. So on the, is this what you wanted, SPY? Did I make it? I don't know if you have a preference, which one. I don't know. I guess we'll just do the US one. Okay. So on the SPY, we're going to be doing our entries and exits on the 4-hour chart, but let's go higher and get a bird's eye view on the weekly chart, what's happening here. So if it looks a little messy up close, zoom out to get a little bit more perspective. So here we are going in a clear downtrend, making lower lows, lower highs. Then back in June of last year, we kind of went up and we broke that trend, giving us a higher high, but then we immediately came back down and gave us a lower low. And we have since, well, we broke this high, so then that would put us back in a minor uptrend. So in the weekly chart, we're kind of in this range. It's definitely, depending upon how far you look out. If you zoom way out here, we're in a downtrend on the weekly chart. You can kind of clearly see that. Overall, we're making lower highs, lower lows. If you kind of zoom in to this area here, we've got a low, but we're kind of, making some higher highs here in the short term. And right now we're still making higher lows and still making higher highs in the short term. So this is where, it might be helpful to go up one more time frame just to kind of get that larger perspective. On the monthly chart, we were in a deep uptrend and we've since rotated down. So I would say if we combined the monthly and the weekly, I would hone in on the downtrend if I wanted to trade with the trend, at least the way that I look at the charts here. So let's go back down to the weekly chart. So let's look at some key levels of support and resistance here, and then we'll go back down to the 4-hour chart. So I'd be kind of partial to some selling opportunities, knowing that the bigger trends are with downward pressure. I see a level of support here that is being retested the last couple of weeks at the start of the year here. This level is also, see, we've got this level here, this level here. We're kind of in this little range, but ultimately I would consider us maybe at this little support level. So what I would want to see on the 4-hour chart is I'd want to see us drop below that. and then come back up for a retest. So really, if we dropped below that, that would be giving us some lower lows on the 4-hour chart. And if we especially dropped below this previous low, I would really like it. Okay, so what I think might happen if I were to like predict this, if we do end up, and this is the thing about price action trading as well, you don't have to guess. You have to have patience though. If you have patience with price action trading, the charts will tell you what they're going to do. You just have to wait, and you have to know what to look for and what to hone in on. So I picked out this key level of support and resistance from the higher time frame chart. I'm honing in on it on the 4-hour chart. Price is currently trading above it, but in order to support a sell position, I want this validation that we're going to make a lower low and we're going to get that downward pressure again. So if I were to guess, for what I think might happen, and it's really not about guessing, but this is just saying, this is what I would want to see if I'm going to actually place a sell order, because I would not sell right here. I need price to come down, and it might come down to here. It might come down to here. It might come way down here. You never know. But then I would kind of use that recent price action and wait for a pullback either into this higher time frame level of support and resistance, or just use a Fibonacci, right? So again, things move in waves. So it likely won't just go straight down where I want it to go. It's probably going to do something more like this, where it might go down, kind of testing that level again, and then it might go up, bouncing off this again before it decides for sure that it wants to go through it. And then it might come back up for a retest of this level again. So when we see that play out on the 4-hour chart, which with each of these candles being 4 hours, could take a couple of days, or it could happen today, or it could take a couple of weeks, right? So we don't know, and this is where the patience comes in, especially when you're a higher time frame trader, is you just have to wait. You have to know what you're looking for on the charts. There's such a visual component to trading, and patience is probably one of the hardest traits for traders to really embrace, but patience is your friend when you know what you're looking for, right? Because there's no guessing. You say, you know what? I'm going to trade the trend. I'm going to trade around key levels of support and resistance, which this is what I say to myself. I want to trade in alignment with the trend. I want to trade at a key level of prior support or resistance. And I want to wait for price to give me a signal on my entry time frame that it's, at least appearing like it's going to continue that direction. So Mike asks, why did you pick the 4-hour chart rather than the daily or the 1 hour? Okay, so Mike, I had asked what kind of trader you were, and you said you were, you did type daily. You said I'm a daily trader. I thought you meant you were a day trader. And I probably just misunderstood. So yeah, so for swing trading, and this might just be my own finicky definition, for swing trading, that means you're going to be in a trade from a day to a week. And you have to go a little bit below that to get a little bit more movement in the charts, which is why as a swing trader, I use the 4-hour chart. For me, trading on the daily chart, for your entries and exit definitions, is more of like position trading. So it's probably just a nuance in my definition versus your definition, but I can do the same analysis on the daily chart and show you how that would look. So let's pop up to the daily. So again, for me on the 4-hour, just to kind of wrap this up, I want to see price move below this weekly level and come back into it for a sell before I decide I want to take it down. I want to get this confirmation that we're going to go lower than some of these more recent lows to kind of confirm that downward bias between buyers and sellers. Okay, so let's pop up. I'm going to erase all of this and we'll start fresh on the daily chart just to kind of show you how I would do what I would consider to be more of a position trade. If you're trading, you're doing your entries and exits on the daily chart. which means you're using daily price action to define those. It takes a day for each of these candles to kind of come to fruition. So it's just a longer play out. On the daily chart here, you can see we're going down, up, down. We've gone up on the daily chart. We haven't breached this prior high. So overall on the daily chart, I'd say we're still in a downtrend on the daily chart. Now for higher, the kind of bird's eye view for trading off of the daily chart, I would go up 2 time frames, which would be the monthly chart. So let's see if the monthly chart's in a downtrend. So we looked at this a little bit earlier. It wasn't an uptrend. Now it's making lower lows, lower highs. So yes, the monthly chart is in a downtrend, which aligns with the daily chart. And I would say also, I want to look at support and resistance up here on the monthly chart. So I'm just going to take my horizontal lines. I spotted this level very easily where price went up and then reacted very strongly. It also kind of aligns here where price went up and went down. So that's a level I'd want to pay attention to. And then yesterday, a couple months ago, it also kind of toggled this level. So price went down, bounced off this, went up, kind of bounced off this level, came down below it, making lower lows, which I like. Then it came up and kind of came close to retesting this. I bet if we went back further, we'd see some additional support and resistance kind of in that price area. Let's see. Sometimes you have to go back really far. This is a monthly chart, so we don't have a lot of prior history in this price range. But this is a good retest of this, and we got a lower high. So I like that in support of the downtrend. So now let's look at some of these key areas that I have marked on this chart, on the daily chart. So on the daily chart, we're in that downtrend like I wanted to see, but we're operating above this prior monthly support and resistance level. So what I would want to see here on the daily chart before I'd enter a sell is a lower low. So right now we have this low, we have this low, we have this low. Now we're kind of getting some higher lows. So I want to see another lower low before I would consider a sell. We haven't breached this high, which is good for, kind of the trend on the daily chart. We haven't gone above that to get a higher high on the daily chart, but we've got a little consolidation here. So what I want to see and what I want to see confirmed on the charts is a little breakout to the downside again before I would put in a sell order. So that might mean just going below this monthly support and resistance line that I had drawn, or even going below this prior low would be a little bit stronger as well. So again, just based off studying charts for, over a decade, this all comes pretty easy to me as someone who studies price action quite a bit. But what will probably end up happening if this ends up going down is price, will come down, maybe retest that again. We might get another bounce. And then, if the downward pressure persists, we would, kind of end up operating on the daily chart below this monthly support and resistance line, closing below. I would want to see a close below this line, or I'd want to see some wicks go lower than this one. And then from there, you can draw your Fibonacci, however far price goes, and then, wait for the pullback to enter, which might be close to this monthly support and resistance line, or you could use the fib. So those are 2 ways historically that have been pretty reliable. The fib is nice because you get an exact price. These monthly support and resistance lines take a little practice, but the way that I draw them on that higher time frame is the close price of the first candle where price changes direction. So I'm just going to reset my chart here to get it resumed. So when I drew that line here, price came down and then reversed. I honed in on the close price of the first candle where the bounce happens, and I used that exact price. So 37725. You can see in the close price here as I hover over, that's exactly where I put my line. And it's just remarkable how often when you go down 2 timeframes, price really responds to that level and then pulls back up for a retest before going down. Again, I'm not saying this is going to happen. I'm saying this is what I want to see on the charts before I would put in an order to sell, as, you know, in this case, a position trader. So it might take, you know, a week, a day, and price today could come down and do what I'm looking for, or it might take a couple of weeks on this daily chart because each candle represents a day. Was that helpful, Mike? Awesome. We're coming close here on the call. We've got about 10 more minutes. I've got BMRM on my list. If anyone else wants me to look at another ticker or a Forex or crypto or anything, let me know. I probably have room for BMRN and maybe one more. So BioMarin Pharmaceutical. And I've got WTI on the list as well. Okay, so Andrew, you had submitted the BMRN. Which, what kind of trading approach do you want me to do? Do you want me to do scalping, day trading, or swing trading? Swing. Okay, so that means we're going to be doing some entries and exits on the 4-hour chart, but I'm going to get a bird's eye view 2 timeframes higher. So I'm going to go up to the weekly chart to get a bird's eye view. So BioMarin Pharmaceutical is definitely in an uptrend on the weekly chart. So we were kind of going down, headed into the last quarter of last year. And since we've gone up, we've breached this high. So we're getting higher highs and also higher lows at this point. We do have a little bit of a recent, you know, if you consider this to be a swing right here where price pulled back, went up. I don't really consider this a transition to a downtrend because this isn't really a swing low the way I like to see them. I like to see a wick with one higher and on both sides. This doesn't have a higher low wick to this side. So this is a pullback for sure, especially given the fact that it's on a weekly chart, but it's not like a swing low the way I like to see it for determining trend. So for me, this is still in an uptrend on the weekly chart. So I'd be looking for buy opportunities, only with some confirmation around support and resistance levels. So let's look at some support and resistance levels on the weekly chart. Just by looking left, I see that level right there. And I also see this level right here. There's a couple that are really close to each other. So let's now go down to the 4-hour chart and see what price is doing around those levels. So we're looking for a buy, right? Because we had the upward pressure. I like to trade with the trend. So I'm looking for a buy opportunity around these key levels of support and resistance. So price has operated on the 4-hour chart. We were in a downtrend here on the 4-hour chart. Price has gone up, giving me the higher high, demonstrating a rotation, which I really like to see. So at this point, we've got these 2 levels. The candles have closed above it, demonstrating buying pressure that might go beyond them. So at this point, this one's probably the closest one we've seen to potentially putting in an order. If you were, let me remove this. If you were to use support and resistance, you know, maybe I'd do a pullback to here. But the problem with that pullback is then when I go to look for a stop loss, it's way back here, you know, which is about 45 bips. You know, you add in another 15, you've got about a 60 bip stop loss, which is decent for swing trading. So that is an option. If you're feeling impatient, you want to get in on the trade. Another option for you is to wait for the pullback to the 61 retracement. And you can also like tailor these in whatever broker you use or trading platform. You can also, I like to use the 61, but you know, you can get rid of all these other ones if you don't want to use them and just hone in on, you know, the one that you like to use. That's how I would adjust my charts if I was trading this way, with the Fibonacci's for my entries. So then you could have a pending order right here to buy, waiting for this pullback. You could do a natural stop loss, you know, in the same area using this prior low, adding a buffer of, you know, 15, 20 pips, whatever your tolerance is there, how much of a buffer you want to give. And then you know, could look at your R value for profits. Definitely, if price came down here, you know, I continue to use support and resistance as like, if price pulls back here and then goes back up, when it retests this level, it's a great time to reduce your risk, you know, tighten your stop loss, take half of your profit, whatever that is. But this prior level where price went up and then pulled back for your entry is a really good level from a price action standpoint to consider taking off some risk or locking in some profit. Okay, was that helpful, Andrew, on that one? But this is, you know, a very close trade in my opinion. If you wanted to trade the trend, if you wanted to trade price action, you know, I'd be having a pending order right here. You do have to be aware of like daily rollovers. That's not something we covered on today's call, but, you know, depending upon how you trade, you want to be aware of the daily rollover, the weekend rollovers that happen where you tend to get some gaps in price, like this. You wouldn't want to put in a trade right before that rollover period. Or, you know, at the end of the day, you'd want to kind of find your time of day for ideal trading based on your market and based on your trading approach. Okay, we've got time for one more, the WTI scalping. So let's go to WTI. So far, we've looked at swing trades, we've looked at day trades. WTI, I'm guessing you want the New York Stock Exchange, WNT offshore, is that correct? So for scalping, awesome, thanks for confirming. For scalping, I will generally trade intraday tradings, like using the 15-minute chart. So I would go down probably to the 5-minute chart for scalping. So this is where we're going to do our entries and exits. I will say scalping is a lot more sensitive to news, to volumes and all that. So you might need to do a little more research on what you trade to see like when these volumes really pick up each day, and being aware of any kind of economic or company specific announcements. The smaller timeframes you trade, the smaller your stop losses are going to be in terms of distance, and the more sensitive you will be to volatility, whether that's expected volatility or unexpected volatility. So, okay, so scalping, we're on the 5-minute chart. This is where we'll do our one tweet can throw everything into a loop. Absolutely. So 5-minute chart is where I'd probably find my entries and exits. We'll go up 2 time frames. So that means the 15-minute to the 1 hour to get our bird's eye view of what's happening on this ticker. So in this one, we're in a downtrend. We're getting lower highs here. We're getting lower lows. You can see the channel here on the 1 hour chart. In terms of key levels of support and resistance, I like to identify those while I'm on the chart here. So I see this one here, which you can see earlier today, price bounced from. And then you'd have to go back a little bit further, but we have some other things back here. I'm going to just quickly notate those. Sometimes I mark a couple of levels just to you know, have a little idea of what's happening. This is a really good level. You can see on the 1 hour chart, which is the higher time frame in this case, we have a lot of good respect. That's what it means when price retests. That's what I call it, when price retests a level without blowing through it. You know, it will eventually blow through it, but when it tests it and rejects it and tests it and rejects it and tests it and pushes lower and lower and lower. And then here, price went above it. And then the first time it comes back to retest, oh my goodness, look at that reaction. It's huge. So this is a very respected level of price historically on this chart. And that's good to know. So we have a couple of levels here on the 1 hour chart. The 1 hour chart's in a downtrend. You could also kind of for a higher level, look at this. So then what I would do is go back down to my 5-minute chart. So on the 5-minute chart, every candle is worth 5 minutes. So it's moving a lot faster. So earlier today, for example, and there's a lot of examples on this from the levels I've drawn. So I'm going to just rewind a little bit. So earlier today when we were here and price starts doing lower lows and then boom, blasts below that level up here. What I would have been doing had I been at my charts and trading this is I would have drawn a fib and said, let's do a 6, whoa, and look at that. And that happens more times than you can realize, where a higher time frame, monthly, or not monthly, in this case, the hourly support and resistance lines up almost exactly with this 62% retracement. Pretty cool. So whether you use the fib retracement or the prior level of support and resistance, that would have been a great place to enter with a sell. Price did go through it just a touch, but it wouldn't have gone. My stop loss would have been above this by 7 to 10 basis points. So we didn't even come close to retesting that stop loss. And then price, sure enough, has reacted from that. This trade would still be in progress though, entering at this level. So it's 8 basis points. I would have, probably added about 7. So I'd have about a 15 pip or bip. Sorry, my terminology. I'm Forex trader. For those of you that have joined more recently, 14 basis points. So your 1-to-1 would be down here, which would not have been recognized yet, but you got a lower low here, which is a good sign. That would be maybe an opportunity to tighten your stop loss a little bit, reduce some risk from the trade. But ultimately, your 1-to-1's down here. You'd probably want to reduce some more risk if price retests this level. If you're not in this trade already, the next level that I would be watching is one of these two. So in terms of continuing down and finding another entry on this particular unit, I would want to see price go below this prior low on the 5-minute chart. I'd want to see it drop below that and then pull back up into one of these levels, or again, just use the Fibonacci retracement based on that price action and the swing high and low. Yeah, you're welcome. I'm glad the Fibonacci's were helpful. And I think fibs just kind of are a very objective way to find your entries without letting, emotion and whatever. And you can just be patient and say, for me, using fibs have helped quite a great deal in the past when I was a little bit newer to trading. Now I prefer to use support and resistance levels from higher timeframes, but it's all up to your preference and what works for you. And a lot of times they line right up. All right, so I know I've gone right to the end. I'm just going to quickly share my contact information for anyone who might want to get in touch. My website, I have a podcast that's free. It's on Anchor FM, Apple, Spotify, Google. It's called the Trade Focus Podcast. I do have a book that I've written. It's available on my website, TradeFocus.com. I have a Facebook page. You can feel free to follow me, Valerie Fox Fan. And then if you want to connect via email, just email me at support@tradefocus.com. So thank you guys so much. I appreciate your participation. I hope you enjoyed the analysis, the price action analysis. And if you joined here right at the end, definitely go back and kind of watch some of that fun analysis. We covered trading approaches, trading styles, and how you can kind of overlap multiple levels of trading.